The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the April 2nd, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And, of course, the easiest way to do that, the easiest way, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, and I mean most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, we've got you covered. Just send me an email. Let those fingers do the walking. Steve@TFNN.com. Inside that subject heading, if you'd be kind enough to put radio show question. And, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Turns out to be Taco Tuesday as well. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading down 96 points, 26,162 is the print, about 0.4% to the downside. S&P is flat. It's off 2 points. NASDAQ is slightly higher, up 11 points. That's less than 0.2% to the downside. Russell off $6. New York Stock Exchange down 27. So a mixed bag. Spot volatility index is unchanged, 1340. Below its 50-day exponential moving average. Still says plenty of liquidity out there. Gold's up $1, silver down 3 pennies. Light sweet crude up 70 cents, trade out at 62.41. Lead the charts, the upside. Dollar-wise, it's booking holdings. That's only about $10. IABIO Med up 6, Facebook up 5. Regeneron Pharmaceuticals up 5. To the downside, Walgreens Boots Alliance down 772. That's 12%. 22 million shares behind that move lower so far. Chipotle off $7, 1%. Mercado Libre off $7, a little over 1%. Humana off 5, nearly 2%. To the downside. Of course, I want to look at what you want to look at. That means we're going to go to our first emailer out here. This came in at about 7:28 this morning. This is from Leonardo DiCaprio. Well, pretty close, and he will probably laugh at that, I hope. But Leonardo writes in, he says, hi, Steve. Hi, Leonardo. HMY, that's Harmony Gold, seems to be breaking down. Let's go ahead and turn over our 3 time frame chart. So here's the Harmony Gold charts. Let's go ahead and read the question now. Do you see potential support at 169? 169, well, we'd say 174, so you're really close here. 169, or do you think it's more likely to challenge the 147 level out here? I don't know. It's got to break down through 169 first. Also, given the VIX has dropped below 15, as the market powers ahead blindly, do you see UVXY's potential short-term buy, especially given that the last and first 4 trading days of the month are the most bullish, short-term tops, so on and so forth? Well, let me just, so first of all, if you're asking me about UVXY for anything other than an intraday trader, I'm the wrong guy to come to. It's the most horrible vehicle that is out there. But I don't like to trade it, so to speak, out here. But I'm going to answer your question as best I can with regard to what I see the market's doing. That way I'll have the information for you to determine whether or not you want to go ahead and take that trade out here. So if we take a look at Harmony Gold, it is below support on a daily basis. That was a $1.86 out there. You're trading at $1.81. As long as that's the case, then the next level that it should be targeting is the bottom of its weekly profile. That's at 174. You are below. You can see on the monthly chart, Harmony Gold is kind of uninteresting. Just been moving sideways for quite a period of time out here. You'd really say moving sideways since March of 2017. That's 2 years with the now. The range out here, you could say the low of the range is about $1.43 up to as much as 250. So on a percentage basis, I get it, I see it, but yeah, okay. Well, you kind of got my sentiment there. All right. If we go take a look at the daily time frame out here, so $1.74 is the price level that I'd be watching, Leonardo. If it gets below that, then maybe from a dyslexia thing goes to $1.47, 174, 147. I'm not sure. Maybe the 147 coming from the lows out here. Is that it? 143 actually is a low from the week that began August 13, 2018. Harmony. Oh, I didn't mean to do that. That's for sure. Let me see if did I delete that? Oh, I think I did. Well, okay. So much for looking at that daily time frame chart. Actually, I can do it this way. Good thing I had a backup here. And so here is the daily time frame chart. We're really not seeing any kinds of bottom signal here on a daily time frame. I don't see anything on the weekly time frame. I don't see anything on the monthly time frame. So yeah, it looks like Harmony Gold is headed lower, but maybe not that much. Watch that 174 level. You asked about UVXY and the spot volatility index out here. Here's what I think the markets are doing. So this is like a segue into the markets out here. If we take a look at the Dow, and for me, I believe the focus should be here in the Dow. This is the Dow Equity Futures Contract. It's not as if you haven't seen this chart before, but it's of major relevance right now, right here, right now, today, because, and let me just do this. Let me just start, in essence, with the blank chart. And I'll do that by going ahead and turning off some of these tools. I'm not going to redraw them. I don't need to redraw them. We're just going to take a look at the consolidation. So here is a short term on the daily time frame chart, Leonardo, of the Dow Equity Futures Contract. It is a very clear consolidation. It is very clear because we have highs being tested. The high was February 25th out here. That was tested yesterday and thus far is held. The lows have been tested. You had a low out here that began on February 13th. That was retested out here on March the 8th and March the 11th. So the lows, it's very clear consolidation. Somebody might say a double bottom. Some people might say a double top. Those patterns aren't doubles until you break one side or the other. Here we're just in this sideways consolidation. Is it any wonder to you or I that price is hesitating right now? The answer should be no. And at this stage here, it's just a hesitation because it's not like you and I have seen any kind of reversal pattern, at least from a daily time frame chart. Now, this is about 1,000-point consolidation, runs from about 25.3 to 26.3, give or take. We're not going to be exact out here. Now, the cool thing about this consolidation, we don't know if it's going to be able to bust them to the upside. If it can't, and price heads down to the bottom of the consolidation, well, maybe that UVXY trade might be okay. When we come back from this breakout here, let's redraw, let's add back in the upside potential and the downside potential. For right now, it's just a consolidation potential. Steve Rhodes with TFNN. Be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So what we're taking a look here is our first writer in our emailer, Leonardo, is looking for a possible short-term top inside the equity markets, wants to go ahead and trade one of the volatility tools out here. And so what we're looking at is what I think is perhaps the most important chart for Leonardo and for you and for I to get this message as to the direction of the markets. And that is this consolidation pattern inside the Dow Equity Futures contract. And so price has, in essence, stopped at that consolidation. It's thinking about it. If you wanted to take the short in the market, I can see it right here, right now, going ahead and take it. I'm not saying do that because I don't see that signal that has taken place. And I'll show you what I mean when we take a look at a 30-minute chart out here. But, hey, this is where your back is up against the wall. So if you've got a hankering for doing it, I get it. And you close it out when you see price, if price closes over the top of this consolidation. So let's go back to what Stevie's referring to. Now, the beauty of a consolidation is as follows. It provides you and I with a measured move. It's equal to or greater than the consolidation. That's reflected by both the little green and red rectangle that I have drawn here. Those are the rectangle sizes equal to the consolidation. Now, the cool thing is that means that a break to the upside, and this is why, Leonardo, if you took the short trade and you got to close above the level we'll use here is going to be 26,271. Yeah, that's the number we would use, 26,271. A close above that says you're likely on the wrong side then. That price instead would be making a move up to 27,309. Now, it's only valid if price stays above the top of that consolidation. Not all breakouts turn out to be a real breakout here, but I think that's how you would go ahead and interpret this one, because as we look at other charts, there's no reason to not interpret it that way. Likewise, if ever we were to see the Dow, let's say it can't bust through this consolidation And between now and who knows when, price moves all the way back down to the bottom, the hammer candle out here that took place on March the 8th. Well, if we want to end up bust through the bottom of that consolidation, gives you the price projection of 24,229 out there. So there's your upper level. There's your lower level out here. Now, the reason why I say there's no top in place just yet, we would see it on a short-term time frame. And what I mean by that, I'm just going to look at the 30-minute time frame here for the Dow Equity Futures contract. If we take a look at just using our Tommy DeMark setup trend lines out here, those are occurring after we get these different 9 counts, and each of these 9 counts represent a close either above or below. To the upside above the session 4 bars earlier, you get 9 consecutive ones, and you get a star. And that star says, hey, be careful, because you could see a change in trend here. And what we can see is that we had earlier this morning in that move lower, taking a look at the 30-minute time frame into 11:30, this is when it generated, meaning doing that 9 count, generated a 9 count bottom. So far, it's been the low. Not unusual for that to be the case. Now, this 9 count, as you will see, completed before that TDST line. And that's powerful, actually. Look, I can't control what the market's going to do next, but what you and I can do is use a set of tools that's reliable enough for you and I to go ahead and make a call. If we were going to see a change in trend out here, Leonardo, you've got to at least see this level of support. That's the support level that is represented by the low from 10:30 in the morning yesterday, April Fool's Day. 26,108. You've got to see a close below that before you're going to get any other type of signal. Likewise, right now, because we've got that 9 count, if we take a look at if the Dow Equity Futures contract, remember I gave you a price, going to be different than this price, but here this says it closed about 26,274, says you've got further breakout to the upside. So the market right now is, well, it's still bullish. There's just no question about it. But so bullish that it's still uncertain whether it really wants to go ahead and take out those highs out there. If you and I switch and we take a look at our market profiles out here, there's nada, zippo, zilch, nothing out here. Well, I can't say nothing completely. This is the June contract. We just rolled over last week here. Nonetheless, I'm going to put up the June contract here. And that what can be perplexing, I suppose, is that if I go ahead and I use my synthetic version of the contract, the composite, so that I capture all of this other data over on the left-hand side here to give me a more accurate set of profiles. I'm not saying these are inaccurate. I'm just saying I like more reliability. But nonetheless, if you take a look where price found resistance, 26,263 is the top of this weekly box out here using the June contract. So, but it's straight above the top of the daily, 26,068. It's sideways. Peter's asking me the question, when will this flat market end? Well, of course, he's only talking about the flat market for the last several hours, I suppose, out here, so to speak. But so resistance is where the market is at, but no levels of support that I can identify have been broken through. So I hope that helps you out with regard to what you ought to do. But one thing is that Peter pointed out here, Leonardo, and it's really a good, valid point, and that is, if there's any one thing that you don't want to trade, I'm assuming you're not a trader using 2-minute chart and so forth. But even if you were, if there is anything you don't want to do with regard to that UVXY, I think it's a double or triple out there, is you want to have a momentum market. You don't want a sideways market. You'll get chopped to smithereens out there. Peter, you say the ES Mini 30-minute chart. That's what we had. Oh, we had the Dow. I apologize. Thank you. And so Peter was asking to take a quick peek at the ES 30-minute time frame chart. Now here, this kind of makes the point of why these setup trend lines are so important. Because if you take a look at where price stopped out here, it stopped this morning. It stopped right at that support level, which was established by the low at 4 o'clock in the morning inside the ES Mini. That low was 28.64. Yes, price pierced through it, but it closed above it here at 11:30 this morning. So it just simply held out here. Now that's on the ES Mini. You were asking about the OUL, the oscillator and change line, and saying it's flat as can be. I'm going to take your word for it. I don't know which of the time frames or indices or you were looking at, but let's go to the next requester. Can we call him a requester? I think we can. This one is from Carlos R. Hey, Steve, question on going short the Russell 2000 with TZA seems to be holding the $9.50 area. When would be a good time to enter? Okie dokie. So first, let's do the same thing, Carlos. Let's do the same thing. I brought over the Dow 30-minute and the ES Mini. It would be foolish if I don't bring over this one. So here we can see that, in fact, price is below support. So the Russell 2000 is broke a short-term level of support, just a short-term level of support. The next one would be out here. This was from the gap from Sunday evening. And so that's what I would be, I suppose, at this stage here. You'd like to get synergy out here, Carlos. You'd sure like to see failures in the ES, the NQ, the Dow, and the Russell 2000 out here, because otherwise, and not that the Russell can't lead things lower, but when you don't see any support levels being broken on the other equity futures contracts, it just makes it more complicated out here. But look, we're going to go to a break, and I will finish taking a look at the Russell 2000 for you, and we'll identify where it's likely headed. From a bullish standpoint, 1577 would be the number, and that's where you might want to look at putting on a short. Steve Rhodes with TFNN. We'll be right back, and we'll take a look at the TZA. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're trying to answer the question for Carlos. He wants to go ahead and go short The Russell 2000 wants to use the TZA as a way of doing that. So our first outcome here is to try to interpret the message bullish or bearish. What are the signals coming from the Russell 2000? And if we just simply take a look at the equity futures contract, what we're going to see is price right now is trading right about at its point of control, the center of the box. 1553 is the number. We're trading at 1555. That's good enough for me. But staying above the 1553 level encourages us buyers to push price up to the top of that profile, which would be 1577. Now, it's a bearish structured box out here, so if you're looking for the best type of entry where your back is up against the wall, similar to you would trade it the way that we took a look at the consolidation pattern inside of the Dow, you'd wait for price to get to 1577. Let's see if there's any reasons to not wait for 1577. If we look at Stevie's his Ninja Trader chart out here, here's what we're going to notice. See, this equity, the index itself, or the equity futures contract, went ahead and made a nice top out here with this bearish engulfing, this Rhodes momentum indicator top. It did that on March 4th. What that means when you make that top is that price should go experience and test support. It eventually did that. Remember, we were taking a look at those Tommy DeMark setup trend lines, this red line out here. Take a look at where the Russell 2000 bottomed, Carlos. It was March 25th, right as it was testing that level. Now, at this very moment, price is sitting right on Stevie's green line. So it's neutral. Peter mentioned something about being flat. When price is sitting on the line, green or red out there, that tells you that the price oscillator, that's the difference between two exponential moving averages, 19 and 39, is moving sideways. It does not get more flat than that. Staying above this level is short-term bullish. There's no real breakout inside the Russell 2000 until it clears the high from March 19th. It just so happens that that high is 1577. So I've got two numbers at 1577. If you believe in coincidences, well, then that's a coincidence. If you're asking me when's the best time, other than seeing some other signal today, and on a short-term basis, we saw earlier we didn't see that, I'm going to go with 1577 as the number inside of the Russell 2000. So I hope that that helps you out with regard to what it is that you may want to do out there. Let's go take a look at the next request out here. The next request coming in from VMware. Hi, Steve. Good afternoon. Well, good afternoon to you. I am long Facebook. So let's go take a look at Facebook. Let's do our 3 time frame analysis out here. And let me further read the question. So it says, I'm long Facebook. Can you tell me the support and resistance levels and an exit price? Well, you know, we were talking about consolidations earlier. You can see this nice little consolidation pattern going on inside of Facebook. And let's see, where would we put the top? It's trading right here. So Facebook, a little bit like the Dow, it had a nice move higher. That nice move higher was on the trading session of January 31st. Wide price spread, accelerated volume, 77 million shares. That was a beautiful thing. Now, it's testing this little shooting star from March the 11th out here, 18 million shares. You're at 14. It's pushing into a swing point with volume. So really what you could do, one way to do this, you can see the consolidation. And so all you have to do is just measure that consolidation. With regard to, so you asked where is support? Support would be the bottom of the consolidation, around 159. Where's resistance? Well, you're at resistance right now. We've seen that, but you're pushing into resistance with volume. Doesn't say, just because it's pushing with volume, doesn't say you're going to break it, but it does say no reason to exit the position with regard to Facebook. And maybe this is headed to 189.26 if it can take out the resistance level. That's the high from March the 11th. 174.30. That would be the measured move, equal to or greater than. That's what the daily time frame chart is communicating to you and I. Now, price is beginning to move higher and do with less relative energy out there. But you see, we had that bearish reversal signal here, the shooting star on March 11th. That sent price lower to test a level of support out there. Right now, we do not have a bearish reversal candle. In fact, if anything, price bounced off of Stevie's green line at 169.92. We've got a rising price oscillator above zero. This suggests Facebook wants to go ahead and take out those highs. It wants to. But whether it can or not, that is another question. I'm not going to answer that question. I will say that it's up at resistance resistance both on the daily time frame, resistance on the monthly time frame. The monthly time frame, you see Stevie's green line is priced at 176.33. Not until you see it close above that level would we say, okay, there's a breakout going on in Facebook, maybe to take it back to its all-time highs out there. But that's what I see when I take a look at the daily and the monthly time frame charts for Facebook. The weekly, let's just finish it off out here. The weekly right into support as well, this little dark cloud cover from March the 15th. So you can see it's sitting at resistance, but it's pushing higher. It's pushing higher, doing some decent volume behind it. And so that's what Stevie sees right now. I hope that helps you out, BM. Thanks so much for writing in. Do we have any other questions out here? We do. We've got a number. So let's take a look at LB McLeod. This is from Lee. Lee writes in, hey, Steve, what do you think about the Bitcoin breakout? How high do you see GBTC going? I didn't know we had a Bitcoin breakout. So I will just have to say, hey, thanks for letting me know. Let's go take a look at, though, what is this? I think this is the ETF GB. Where is it? GBTC. Is this the Bitcoin Trust? It is. Yeah, it is breaking out. What do I think about it? Not much. Let's go take a look at, so you're saying where could this head to? Now, it's a beautiful gap up here. If, here's the deal with regard to this ETF. And let's just look at the weekly time frame right now. The one thing that you and I know, Dave Mason knows this too, is that we haven't seen the Bitcoin, the Grayscale Bitcoin Trust close above the top of a profile, well, like in forever. The last time we saw it break above, close above, which did lead to higher price, was back in October. This is a weekly chart we're looking at, October 30th, 2017. Now, closing above resistance would, in this case here, specifically in this case, would suggest something other than a counter trend rally. Right now, what we're going to do, Lee, you and I, we're going to say, hey, we're not falling for this just yet. At least it's, in my opinion, it's too close for you to take a long position now, knowing that resistance is at 618. 618 is the top of that weekly profile level. It's trading at 562. Hey, if you want to try to gather 50, 60 cents out there, okay, yeah, it's 10%. But the downside support is 416. So I don't like that. I don't like that setup. But you were asking me, what do I think about the Bitcoin breakout? I'm going to say no breakout. Not just yet. Now, of course, that's looking at the weekly time frame chart out here. If we look at the daily time frame chart, you'd say, what do you mean no breakout? This is the second gap to the upside with volume. And I would say you're absolutely right. But I cannot ignore the weekly time frame chart for GBTC in providing you with information, because if I do that, I could lead you astray, where I would feel much more comfortable saying, wait for this thing to close above 618. Then you'd be onto something. Then you could be taking a look at buying the pullbacks out here. Now, just so happens to be coincidence, I'm sure, that the top of the monthly box out there, top of the monthly profile, even though it's just April 2nd, is 575. Them is your numbers. There you go. 561 and 575 and 618. I hope that helps you out. Best of luck, Lee. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off 87. S&P is flat out there. Phone lines are open, 877-927-6648. Email lines are open as well, steve@tfnn.com. Just put radio show question inside that subject heading. So let's go do this here. You know, we've talked to Brent about light sweet crude over the past couple of days out here. And when we took a look at it yesterday, one of the things I had pointed out, Brent, if you're listening, was that price was beginning to move higher, doing it with less relative energy. Well, it voided out that pattern. Today, it's moving higher with energy. It's continues to be bullish, as you and I had discussed yesterday. We looked at a price target here, was established on this daily time frame chart by the green horizontal line. That took us back to October 30th. October 30th, that price point out here is 68.08. You're at 62.51. At this stage here, that's what it looks like price is headed to. That's using one tool. Let's go take a look at our other tools out here. Look at our multiple time frames for light sweet crude. In this case here, we're going to look at the daily. And on the daily, what we can also see are the daily, the weekly, and I've added the monthly. This is using my synthetic version of the contract. Now I've got all the historical data. With all the historical data, I can look at a monthly, a quarterly, time frame to identify levels of support and resistance. So if we take a look at where price is headed to here, 66.05 is the point of control. These are the white lines. It's like a little white dash line on my screen. So now we've got two in the 66 level, and then 69.55 is the top of the monthly profile there. Now, it's bearish in structure. You don't know where the bottom is. I turned it off just not to simply provide useless data out here. So it's a bearish structured monthly profile. It just means you have more sellers lined up in the 66 to 69 level for light sweet crude. But as we speak right now, it looks muy bueno. Hey, let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Good, Steve. I just wanted to. I'm looking at a put play on the gold stock KL.
Okay.
I was wondering what your thoughts were on it.
So, okay.
Actually, I put it on last Thursday, and I've been wrong. Right now I'm wrong.
Got it. Okay. So, why did I do that here? Give me 1 second. Let me grab this other chart back here. So, if I take a look at And I apologize here, I'm fumbling a little bit. So first, Kirkland Gold. Let's just take a look at the instrument itself, and that way I won't mess up any of the thinking with regard to gold, because I have to go take a look at what gold is doing to help answer your question out here. But first, with regard to Kirkland Lake Gold, it's trading below its daily profile, which is 32.51. But here's what we're going to notice. We're going to see that today is a Gartley buy pattern. What I mean by that is every Gartley pattern has an A to B equals CD. In this case here, the A to B equals CD pattern, that what it completed today is basically about the 1.618 expansion out here. Now, today is both a bullish engulfing candle, at least thus far, and a key reversal candle, completing at the 1.618 A to B equals CD. We can see that Kirkland Gold had a huge move up off of the lows out here from November 2018. And this is the first time this has had a Gartley or an A to B equals CD pattern to the downside. So this has completed a buy the D point, so to speak, out here. It says that Kirkland Gold today should have put in a nice bottom. Now, prices below support, which is going to be, so your resistance level on a daily basis is going to be 32.51. Now, 32.51 to 32.70. 32.70 happens to be the it's an oscillator and change line, my green line out there. So that's where any bounce should take price to. And the question is, can it clear those levels of resistance and therefore really give you the change in trend signal out here for ticker symbol KL? Now, KL will give us that shorter-term change in trend signal if it can close above the session from April 30th, and that's 31.22 out there. That's what the daily time frame chart is telling you and I. If I look at the weekly time frame chart, I don't have that same kind of signal out here. I have price below support, which was 31.43. But price is well above the monthly profiles. They just formed this month. The top of that box is 23.10. You're at 30.87 out here. So what is it that we think about Kirkland Gold? It may have formed a bottom today with that buy the D point, that key reversal session, meaning price from yesterday has been exceeded to the downside and to the upside out there. So that's what it's suggesting. If I look at the 5-hour time frame chart for gold, we've got two patterns out here. One, we've got the A to B equals CD pattern, the 2.618 A to B equals CD. We've got a Rhodes momentum indicator signal, meaning price was moving lower, doing less relative energy. Price at 9 o'clock this morning ran right into support. That was Stevie's red line, and now price is trading above it. We've got, about 13 minutes or so before 2 o'clock, as long as price closes above 12.93. This suggests to me that where gold is headed to on a 5-hour basis is 12.99. And if price can close above 12.99, then gold has formed a nice bottom. And therefore, Kirkland Lake Gold should also be moving higher. How's that for a analysis of what I think of what Kirkland Gold is telling us and what gold itself is telling us? And therefore, then what would
it sounds very, very good, and I'm going to get out and cut my losses.
Got it. Okay.
So,
yeah. I just think that you've got too many signals out here to suggest, not taking that action.
Okay, yeah, it hit 29 today and then bounced, and that was a bottom.
Sure, and you know what? And Ron, there was no way that you would have known that that's where it would bounce from. There was no real pattern, so to speak, out there inside of Kirkland Gold to tell you that. But your role and my role is just take the information that the market gives us. And if it gives us enough information, if you're a pattern, person like I am, when it gives you that information, then you go ahead and decide what action you should take.
All right. Appreciate that. Thank you.
You bet. Thanks for calling. That was Ron in Denver out there, a Gartley buy pattern. Now, what Ron and I didn't talk about, not for any reason, we didn't show the daily time frame chart here for gold. And what the daily time frame chart here for gold has also done is held the bottom of its profile, 1292. Now, it's not much of a profile. The top is 1302, the bottom is 1292, but nonetheless, the daily time frame up against support that is held also. So hope that helps everybody out there. Okay, so what do we want to look at next out here? Well, we're looking at light sweet crude, so we got that taken care of. What else do we want to look at without any requests out here? New York Stock Exchange. New York Stock Exchange is down 25 points. What does that mean to you and me? Well, first of all, it's really about the advanced decline reading out here. If we take a look at the advanced decline, we've got net decline in issues 530. You've got advancing issues of 1706, declining issues, I take that back. Declining issues 1706, advancing issues 1174 out there. And so, but that is not enough to put the market back in the hands of the sellers out here. The only way that happens is if the advanced decline oscillator, that's the difference between its 19 to 39 day advanced decline information, moves below zero. It's 2380 right now. New York Stock Exchange is still bullish. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is Dave. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's off 99. S&P is down a point here. Now, even though Ron and I are not on the phone speaking right now, I want to give him one more piece of information out here so that he can use this to make a determination about that trade. And this, what I'm looking at, Ron, is a 60-minute time frame chart for the gold contract. There's a couple of different levels that you can be watching. Now, this made a TD setup 9 count. It did this on bar number 8 at 12 noon. And so if gold is going to pull back, it's giving you a signal that it should be doing that now. So that says if price closes over that high, that's 1296.40, your 1295.50 says that it wants to move higher. But the ultimate level to be watching would be price closing over the bar from 1,300 hours. This is from yesterday, March 29th, and that price point is 1301. You can see, remember, we began the show, I think during the first segment, we were looking at the setup trend lines out here and how well they act as support or resistance. And you can see just how well we've seen the support levels. Now we're taking a look at a resistance level, because gold at 10 o'clock in the morning, this was on April 1st, this is yesterday. Why did price stop where it did? Well, I only know that it stopped where it was supposed to find resistance. And so therefore, Ron, you know, you have one other element to consider here, depending on whether or not you want to jettison out of that position. Because if gold were to close above that, I would say it would signal to you and I that the change in trend that we were looking at on a 5-hour time frame is now also giving you another signal here on the 1-hour time frame out there. And likewise, I don't want anybody, just because we were talking about light sweet crude, to now go take a trade in light sweet crude. Don't do it. Not just yet. Buy a pullback out here. Now, if I look at the 30-minute time frame chart for light sweet crude, you'll see that the bar that it's in right now is confirming a TD setup 9 count. It's on bar number 10, the bar following number 9. And so just be this is not the time to go ahead and take a trade on light sweet crude, even though you've got higher prices coming at us based on the daily market profiles we looked at. Folks, thanks so much for being here. Hey, tomorrow's show, I'm going to record tomorrow and Thursday from 8 to 9. Join me then in the morning live at TFNN.com. Send me your email questions. I'll get to those for you. I'll make it pertinent for the 1 to 2 o'clock playback. Thanks for being here. Stay tuned. David White's up next. Tom O'Brien after that. And I'll see you tomorrow morning, bright and early, 8 o'clock. Take care.